Hey everyone, welcome back to Capital Markets Quickie, where we cover what's happening in the markets in just a few minutes. I'm your host, Endrit Cela, and today we've got a big week ahead, so let's get right into it. Just a quick reminder, today's episode is brought to you by AMF Capital Asset Management Frankfurt, your leading provider for individual investment solutions and mutual funds. Visit www.amf-capital.de for more information. All right, let's talk about the big one first. This week is all about the Fed. We've got a critical interest rate decision coming up on Wednesday, and everyone's watching to see how aggressive the central bank will get. The debate right now? Whether we'll see a 25 basis point cut or something bigger, maybe a 50 basis point cut. Now, this would be the Fed's first rate cut since early 2020, so yeah, there's a lot riding on this. Some people, like former New York Fed President Bill Dudley, are saying there's a strong case for a bigger cut, especially since the Fed is trying to pull off that soft landing for the economy, something easier said than done. But of course, it's not all smooth sailing. Reports from the Financial Times and the Wall Street Journal have been hinting that policymakers are split on what to do, so there's a bit of uncertainty here. By midweek, we'll know if it's a cautious 25 or a more aggressive 50 basis point cut. Now, even with all the nerves around the Fed's decision, the stock market had a pretty solid week. The Nasdaq led the way with a 6% gain, its best week of the year actually. The Standard & Poor's 500 wasn't far behind, up 4%, and the Dow rose about 3%. So why the rally? Well, a lot of it is tied to expectations of lower rates. But we've also seen some resilience in tech stocks, which have helped fuel the rally. If we do get a bigger rate cut, that could provide an extra boost, but it also depends on how the Fed frames it. So stay tuned for the market reaction later in the week. Outside of the Fed, we're also going to get a look at retail sales for August on Tuesday. This one's important because it gives us a sense of how the consumer is holding up. As we all know, consumer spending drives a huge chunk of the economy, so this report will help gauge the health of that sector. Along with retail sales, we've got a weekly update on jobless claims coming on Thursday, plus a few checks on manufacturing activity. So we'll get a good sense of how things are moving on both the consumer and industrial sides. Another area to watch this week is the housing market. Mortgage rates have dropped to their lowest level since February 2023, which is a welcome sign for home buyers. Lower rates could help breathe some life back into a market that's been cooling off lately. If the Fed follows through with a rate cut, we could see even more downward pressure on mortgage rates, which could be a positive for the housing sector moving forward. So, if you're in the market for a new home, this might be a good week to keep an eye on those rates. And finally, let's talk corporate earnings. We've got some big names reporting this week. FedEx, General Mills, Lenner, and Darden Restaurants, to name a few. FedEx, in particular, will be one to watch closely. Their earnings are often seen as a barometer for the broader U.S. economy. If they show signs of weakness, it could be a red flag for other parts of the market. On the flip side, if they beat expectations, it might signal that things aren't as shaky as some might think. General Mills will also be interesting, especially as we look at consumer demand for essentials, while Lenner will give us more insights into the housing market's momentum. So there you have it, another busy week on tap. Between the Fed's big decision, retail sales, jobless claims, and some key corporate earnings, there's plenty to keep an eye on. As always, thanks for tuning in to Capital Markets Quickie. I'm Endrit Cela, and I'll be back tomorrow with a brand new episode. Have a great day ahead, everyone.